Good evening, this is Peter Reznicek from ShadowTrader.net and the Weekly Options Room. And in tonight's Shadow Short video, I wanted to talk about what is a liquidation break and how to identify a liquidation break. And more importantly, when a liquidation break is occurring, how to know when to dump longs or go short and change your bias or position accordingly and when not to. So today, on Tuesday, June 10th, there was an open in the market right about here. This is about 9:30 a.m. Right in here is where we opened. You can see the dark color here is overnight activity. And everything was just chugging along just fine. We're kind of maintaining trend like this. And then out of the blue, this happened, this bar. And what I want to show you is how do you know if this bar is going to turn around and snap back up or if it's going to keep going lower? There's a number of different things you can use. What happened specifically on this bar, news-wise, is that the president was in an interview, apparently, and he mentioned that some nuclear talks with Iran were going not as well as expected, basically. And the market just kind of tanked off of that. And so what you want to be doing is kind of take yourself out of price action and more into context, because when context does not confirm, price usually won't keep going. It will snap back and turn around very quickly. So I want to show you a couple of examples here of what happened contextually while this was happening. And the first thing I want to show you is to go into the market profile, which will give us a good idea right off the bat of where the move went. You can see this happened right here in F period. The shock move here, which was the liquidation break, happened here in the F period. And one of the things that I look at, the first signpost you want to look at, there's a lot of clues here that tells you that it's not going to go lower. I talked about this in the pre-market perspective, parts of this at least, before the market even opened. Those of you that are subscribers to my pre-market perspective video each morning, or if you're a member of the Live Trading Suite or of the Weekly Options Room, you receive my morning report and video each day. It's included in those subscriptions. And one of the things that I talked about was I said, look, there's a back-to-back settlement here, meaning that you had the prior two sessions here, 6-6 and 6-9, Monday and Friday. They basically settled at the exact same spot. And then on Monday's session, the point of control or fairest price to do business was actually right underneath the settlement. So that's kind of key. Those of you that aren't that familiar with market profile theory, what the point of control is it's the area where either the most volume traded in the session or the most time was spent. And we know how much time was spent by the amount of letters that go across here, left to right. And that's why this is called the market profile, because when you look at something in profile, you're looking at it sideways, like this basically, or from the side. And the more time that is spent at a level, the greater the amount of value that is there. And remember that value and price are two very, very separate things. They sometimes diverge very often. Sometimes they converge. They can be the same, but they're very often different. So that's important to note. I like to measure my market profile point of control as to where the most volume traded, and those letters are highlighted in green here. So what I knew before the market even opened, and there's record of this, I actually wrote this in the report and talked about it in the video, but about 30 minutes before the market opened, one of the scenarios that I laid out in my report was I was saying that, you know, if this back-to-back settlement area is violated, what you want to be watching for is a failure to get to the RTH low. And if so, then the movement back up here, back over that area, is probably a buy. And you can see that this is exactly what happened during the course of the day when we had this liquidation break here, breaching these two settlements, breaching the POC, which, don't forget, when you breach that POC, you are putting overhead supply of all the volume that traded at that level on top of you, which should create more downward pressure. But it did not, because it was just a knee-jerk reaction news. There was nobody there. And notice how as you went down, what happened to the volume? I call this the taper, which is super duper important. In general, there should always be 4 to 5 digits of volume at every price level, if not more. It can get up into the 5 digits, as you can see, but usually as the market is just kind of humming along, you'll have thousands of contracts here instead of hundreds. And notice what happened here on the move down. It all tapered down to almost nothing. And there's a trick to use that I've been teaching for years and years that works pretty much every day, is that at the high or low of the move, you'll always see a very, very low number. And so even just using just this, it tells you a lot about the nature of this move, that it was probably BS, because if it wasn't, you would see much bigger numbers here in terms of the volume that was being committed at price, because longer time frames would be joining in, and not just the algorithms that are trained to parse news flow and hit the futures up or down according to what words they hear in the news flow, right? It would be something much bigger. So that's something. So basically, you know, this is important to note that, as I said before, and I'll repeat again, this was all mentioned by me pre-market as a potential scenario. Now, granted, it's a little bit harder to trade, because what I was thinking of a scenario was that we would just potentially break this area, dribble down lower, fail to take this out, and then when we slowly rise back up, that's a buy, right? Or at the very least, it's a confirmation that the market is remaining bullish, and maybe you can do a DTE 0 under the low, right? Like we talked about, or a 0 DTE under the low, like I talked about in yesterday's video, okay? Now, as all this was happening, continuing on with the idea of context, look at what was happening to market internals at the time. Most notably, what happened to the weighted AD, which is the most important indicator I think you can have. I highly recommend that everybody purchase this from our site. It's not all that expensive, and honestly, it's worth its weight in gold. And what you want to focus on is right here, because this is 11:30 a.m. Eastern, right when this happened. And if you're not familiar with this, what this histogram is it's a cumulative read that's sort of adding on from the open of all the 11 sectors that make up the S&P 500, starting with technology and financials and going all the way out to materials and utilities. But what it does is it weights those, it creates the histogram in a weighted manner. So you can see here, if I pull this down, see these 11 sectors here? See how there's different weight to all of them. And the technology is worth almost 32% of the market, and the financials are worth 14. So just those together is like 45% of the market right there. So it, you know, and if you add on healthcare, you're over half the market right there. So it's very important to note like what's moving down and what's really driving the market. This gives you an immense amount of market generated information. And so what the weighted AD does, if you can imagine, is these histograms are like a pictorial representation of these boxes. But more importantly, they're like a pictorial representation of those boxes in a cumulative manner, starting at 0 at 9:30 in the morning when the bell rings, and then building on from there. And what those histograms are doing is they're representing the percentage change from the open of all these sectors. And that's what all these boxes are. These boxes are the percentage change from the open, and that's very, very important, not from the prior day's close, because that's worthless information. From the open of the 11 sectors that make up the S&P. And remember, the ES, which is the market, absolutely positively cannot ever do something different from this. This is the market right here. Whatever you see happening in the market, even if it's confusing, even if you're like, I don't know what this was, why is it going up? I thought it should be down. It's going up because technology and financials and healthcare and discretionary are moving up from the open. More than likely, it's the front end sectors here that are driving it. But it could be any mixture thereof, but regardless, this is the market. The ES does not trade in a vacuum on its own. It only does that in overnight sessions when it trades on pure supply and demand and news flow. During the course of a regular trading hour session from 9:30 a.m. to 4 p.m. Eastern, it is not the dog, it is the tail. It is just following. Whatever the cash market is doing, the futures market is adjusting to it at all times. So it's really just the movement of the stocks right here that are doing it. So all that being said, now that you have a better understanding of what that is, look at what the histogram did at that 11:30 mark. It never went negative, never. And there's the corresponding tick action, which failed to hit 1,000, which is kind of key, right? It did later on in the session, but we're mostly concerned with this. We're concerned with this. And this weighted here, not going negative, is really the key to the whole thing. In addition to everything else we just put together, like I literally, all together, I'm probably showing you 5 or 6 different pieces of context that you can look at very quickly to scan to see if it's real or not. Like, hey, should I go short? Should I dump my longs? Should I sell some 0 DTE on the call side above, right? The answer to all those questions was no. Because when you put it all together and you look at this context, the context showed you that nothing was really happening major to the downside. And as far as this weighted AD is concerned, it takes a lot to get this line negative. And if there was going to be more there, what you would have seen is you would have clearly seen that instead of having one little positive histogram here, you would have literally made a negative one that would have looked like this. And then you would have made another negative one that would have looked like this. And it would be a big shift in tone. And when that happens, it confirms to you that the tone is completely shifted, excuse me, in the 11 sectors of the S&P. And now they're actually going more down than up. Even if they're not yet below the open, but they're just coming down so hard from their highs, right? That, more of them are below the open, let's say, than are above the open. And altogether, it nets out that this starts going negative. But again, that never ever happened. It just stayed positive. As you can see, I'll just delete that. It stayed positive, and what happened then 5 minutes later? If you wanted to wait for confirmation, you could have just waited for this. You could have just waited 5 minutes later and said, you know what, I'm not going to jump in on this. I want to watch just to see what the weighted AD does. And lo and behold, the next histogram started building to the upside. And then it was building, building, building like this. And all of that building where each histogram is incrementally higher than the previous, all of that is confirming up action. So I hope you can see just by not only what I'm telling you right now, but just how powerful of an indicator this is, this weighted AD, and how many different uses it has. And it can really give you confirmation of so many different things, from futures trading to swing trading to 0 DTE, etc. All right. So that's that. I hope it's helpful to you. Basically, this is just all about knowing when is a liquidation break and when it is real selling that's going to turn into something bigger. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.